Part of consolidation, yes, there's a lot of force right there about at the beginning of the month. And we also look at the monthly time frame. Was very bullish, basically from May. Currently, we're in June, so I'm still bullish in terms of the S&P. Medium to longer term price to beat is this high right here, 2876.8. Now, if they choose not to, we're going to see a lower high, and this is where I'll be shorting the markets like there's no tomorrow. So part of consolidation here, you see this long lower shadow. This was the event, basically what happened in Italy and what happened basically with Trump and also with Asia. So we have consolidation at the end, a lot of buyers, buying pressure in the end, odds and probability, still a continuation to the upside. So we go through the daily time frame, a lot of force, continuation from yesterday. And this is also why I'm not a very big believer with patterns, because like this one, for pattern traders, they would call this a dark cloud cover. And hence, normally with a dark cloud cover, there is a possibility that the price will continue as a form of reversal, since it's coming from a supply. But nevertheless, bulls are currently still in control. Good level of demand. My target point is still around here between 27.90 and 28.06. So that's with the S&P. Looking at the VIX, finally fill that gap. After that gap, so the chances now is simply, are they going to retest back down to 12, even down to 11? If so, then that's where the S&P will have the ability to continue to go further. On the other hand, because of this lower shadow, and you'll see here, if they're not willing to go and surpass this low of 10.9, then back there onto 10 area. So it's going to consolidate around this level. But I'm still very bullish with the VIX. That means then that I'm also bearish with the S&P if no one's willing to go beyond 2,800. Okay, so if that happens, this is going to go head back around 50. So for those people who or traders who trade options, in actual fact, this is where the premium is the cheapest. And when there's a big spike, that's where they actually make a lot of money. I had one client made like 300% actually. So it's pretty cool. All right, looking at the Dow, same thing, right? So from a consolidation point of view, higher low, odds and probability once again is also to reach this high at 26,699. But if they don't want to play that, you have a lot of confluence around the 26,000 mark, then we'll see a proper lower high. I'm also going to short that one. Weekly time frame, in my opinion, is just a consolidation correction. I'm bullish as of the next few weeks. Daily time frame, same thing, bullish. The bear is depleted, so now the bulls are currently in control. So the odds and probability to go above 25,100 is highly probable to create a new higher high. My own opinion, this is just a correction from this impulse, and then a new impulse will happen. All right, let's look at the dollar index. Dollar index, based on a monthly time frame, very bullish. I'm bullish with the dollar. So hence, I mean, it can go even further on the 50th percentile from a correction from this impulse overall in an uptrend. So there is only a short window where this is going to correct itself based on weekly. Very nice, almost grapes on doji, and reach around 95.15. So since there's no clear cut of a proper higher low, in my opinion, is going to come back down here on 92.50, somewhere around this area from a correction standpoint, before it can continue to go to the upside. So short term is bearish, medium to longer term bullish. So hence is why we went long with the euro against the US dollar. Okay, so that's a good one right at this point in time. Oil, is simply also in a correction state. So based on the monthly, there's a big divergence between oil and the dollar index. So there's one of them is actually lagging at this point in time. I believe oil is the one that is currently lagging at this point. So there is more for oil to actually tank further to the downside. Hence, likewise for Brent oil, same thing. Also creating proper lower high, very nice. In my opinion, can go below $74, $73 a barrel. And if I go through the weekly time frame, same. Doesn't state something different though. So you have a correction before a continuation. There's no proper lower high. Monthly time frame, running out of steam. So here is the consolidation of supply level. But because of these forces here, a lot of sellers, and the force of the sellers is more stronger than the buyers. So hence, it has to come back down to crack, and we will retest 80 once again. Once 80 has been broken, easy. You can go to 895, even $100 a barrel. So back to around 2014, even 2011, somewhere here. Still lower low though, lower high. In order to get up there though, you need a proper higher low. All right, so verdict, short term, actually bearish, even longer term bearish to create that proper higher low. Okay, let's look at gold. Gold, I'm bullish with gold, short term to medium term, just a form of this is a correction. They need to fill in that gap. You can easily head back around to 1365 once again, only if it chooses to, but whether I like it or not. We've been options in 2016, but also in a downtrend. In actual fact, part of the lower high right there. So they need to retest. It breaks out. Now, if it breaks out on this strong secondary downtrend, then easy. 1240, back down to 1200, can back down to around 1140, $1,100 an ounce. Okay, so that's with gold. Copper is a little bit stronger today. Same thing, in my opinion, is also just a correction before a continuation back to 3.3 dollars announced, $3.30. Bullish today. I'm bullish basically from up to 314. Hence, I'm also leaving my position with the Aussie against the US dollar. Okay, TYX, last but not least. So the treasury yield, which makes sense. Currently also bearish with this, but at the same time, there's a lot of gapping, so they will create a gap. Treasury yield is a little bit more ahead of time than the dollar index, so that's a form of a correction. Then it will continue to fill in those gaps, but then the dollar index is also going to head back up sometime in the future. All right, let's look at potential trades. Let's go through the euro first. Euro has a really good potentiality right here. Let's go through the monthly for a second. So it filled this gap since 2016. It has this in order to fill. So we're all the way to 122 in the next 2 months. It was basically inevitable that it will drop after the breakout of this because of such a big steepness right there. Clear breakout as per forecast, reached here, but now they created a lower low and there's no proper lower high. In my opinion, it can go all the way up here, 2380 something, 24. I would prefer it goes to 24 once the lower high hits. Bam, easy. We'll come back down to 115 once again. But nevertheless, so short term, medium term, I'm bullish with the euro. Weekly time frame, beautiful. Nice doji. We're going to have a potential method 2 as of next week. Preferably, though, that if the price of the euro will come back down just a little tiny bit, which potentially it would. If you can go to 116, once it creates a proper higher low, then I'm going to go full force. So right at this point in time, we actually bought some around 115.50, got some at 116. So if it come back down around 116.20, then we're going to buy back in or buy more. Okay, so short term, minor correction, medium, longer term, I'm actually very bullish. So with that being said, potential M2 next week. Once that happens, then easy peasy. So we're also going to go full force. Daily time frame, nothing. Okay, let's look at this one. So no M3s. There's one there saying too short, which is makes sense. It will come back to 116. That's great. M2 already happened yesterday from what we also looked at from yesterday's live trade. So which was forecasted, actually pretty good. About 90 odd something pips based on M2. And there's one there too, about 60. So, but nevertheless, odds and probability that they will retest 116, it's highly probable. So, but now since, so kind of we don't really put in trades being Friday. However, we look for potential trades that once we have 3 different type of methodology, it creates a proper higher low as a form of correction, and we go back in. So it's just a matter of waiting with this one, but definitely euro, US dollar is a good potential trade to go long now rather than shorting. Pound is a little bit weaker than the euro, but now actually today was a better one. So notice a lot of force, notice those buyers, really good. Let's look at the monthly because it's also the end of the month yesterday. Very bearish correction. In my opinion, I also had to fill in the gap. 1, 2. Matter of fact, there's a little bit more right there. So at the end of the day, still on a downtrend. So part of that, continuation, correction, continuation. This is just a correction based on this impulse. Based on that impulse, I'm still bearish longer term. Weekly time frame, same thing, very nice. So stability, correction, continuation. So short term bullish to medium term, at least 400 pips to head back within the supply level. Same time, let me extend that just a little bit. $36.52 from the current price. That's at least 300 pips to the upside to 450. I seldom trade the pound because it's too expensive when it comes to margin. So, however, if there is really like 100% probability, then I will put in a trade with this. But if I have a choice between the euro and the pound, which is much more cheaper, then I will trade in the euro. So that's pretty good, actually. Potential M3 next week. 4 hours are a beautiful entry point, but it's too expensive. We'll come back around 30 pips. This is a good entry point. So I would recommend kind of write some notes down, check it out. So a good price point of buying here, 33.20. Then you can see in terms of target point, well, within target points, which actually you're going to learn this. We have, when I'm teaching, I use fibs because they're highly objective. But once you learn supply and demand, you will be able to just detect supply and demand is a little bit more subjective because you can choose which price points that you want. But when there's a lot of confluence, say like right at this point in time, 50th percentile is strong, which they broke, actually did break from here. A lot of confluence around here. If the price will come back down to 33.20, 33 between 33.20 and 33.25, you will see something around here, 20, 30 pip discount, lower risk, part of the correction. And then you can have your target points back up here, 33, 50, within a level confluence within this segment, really strong. 60, way stronger around this confluence, 100 pips. So you'll see within this level. But the major one is here, 38, which it actually almost reached it. 50%, which is all the 38, these two right here. So you can have at least 90 pips in terms of distance. Okay. 1 hour, actually an hour is finished. Already started. That was the entry point right there. So which we discussed a couple, actually earlier yesterday in terms of potentiality. 60 odd something pips right there. It's really nice. Okay, that's the pound. Dollar yen. Looking at the dollar yen. Let me look at this first. Go through monthly. Dollar, I'm also bullish with the dollar against the Japanese yen. In my opinion, it's just a consolidation component. So odds and probability, some form of stability before a continuation of price to the upside is highly probable. So longer term, I'm bullish with the dollar against the Japanese yen. Weekly time frame, as you can see here, after that, there is short, medium to shorter term unbearish before it can continue to go to the upside. Daily time frame is just a correction. So once price approaches either 50 or 62, 110 is a good price point of selling. There is also that aspect. You can go long and short since it's also an uptrend. If it goes through there, there's at least 60 all the way to about 100 pips. Once the lower high has been reached, then way better of shorting the dollar against the Japanese yen. 4-hourly time frame, stability, level of supply, minor correction. If it can come back around 109, that's a good price point of buying. And then go long before short around at 110 area. All right, for the daily though, just filling the gap, nothing dictating to go long. In actual fact, it needs to go short. 4 hours, 4 hours with an entry point to go long over there. And first opportunity, second opportunity, third opportunity on a 4-hourly time frame. 80 odd selling pips, currently about 60. 1 hour, same thing with this, filling the gap, also bullish all the way back up there, about 20 pips. But it's already Friday, so just leave it alone. Dollar against the Swiss franc was really nice in terms of short-term correction. Monthly time frame, though, I am still bullish with the dollar against the Swiss franc. Short-term, medium-term, I'm just currently bearish, just a form of a correction before a continuation of the price to the upside. Weekly, corrected itself after 1 to 3 weeks, actually. It was really nice. So back to the demand, possibility back to parity before it can drop further. So daily time frame, whether I like it or not, or we like it or not, this is a correction. The dollar is currently strong against the Swiss franc. So there is a potentiality of all the way to about 174. So last high was there, 100 pips. So it is actually pretty good for buying. 4 hours, beautiful correction continuation. Nothing for the daily. 4 hours is actually telling us to go long already, so there's a lot of that's a great opportunity there. 1 hour, still within criteria, nothing. Okay, Aussie against the US dollar. Let's look at the monthly for a second. Monthly time frame has potential for this to do a reversal. Here you still have a higher high. 81.35.1, 85, 81.24. So we have a higher high, higher low. It needs a lower high before this one will tank. But this created new lower lows. So that being said, longer term, medium to longer term still bullish. Mega longer term is bearish. Shorter term is bullish. Looking very nice actually. We have a lower high though. As of this current one, if will come back 75, then fantastic. Because the daily time frame is showing a correction right there. So very nice. I'm bullish. I'm gonna Aussie's base the verdict is to hold positions for this point in time. Hey Bella, how are you? And still within the criteria right there. Already 76.30, approximately 70-80 pips to the upside. Okay, so verdict is hold as a buy. 4 hours, there is an entry to go long. 1 hour, the long has already been done, but in actual fact, there is also 1 hour to go long right there. Okay, so awesome. Long is the verdict with Aussie. Dollar against the CAD. The CAD actually was very weak based on yesterday's reportings. Okay, looking at monthly. Now that you feel that gap, I'm bearish with the dollar against the CAD just to feel back down here. I'm back to 25. So approximately around December, they need to make a choice whether they can continue to go to the upside or next month. Since the price is right up in there, if it breaks out, easy. Can go all the way back to 2016, 145. Weekly time frame. I'm bearish with the dollar against the CAD. Supply, probably back down to 25 is highly probable. Hence, once again, in terms of a correction for the dollar index. Okay, and also potential further strength of oil. Okay, daily time frame. If they're not willing to go beyond 30.46, then they will be shorting this guy right here. So good price point, 130-ish. Another 43 pips to the upside, and then he'll fail. Nothing on the daily, still actually saying to go long based on that entry point right there. So, actually pretty good, but 160 pips. Filling the gap, 160 pips to the downside. 4 hours, beautiful, nothing, consolidation. So let that be alone right at this point in time. 1 hour already stated to actually go short. So, odds and probability that could potentially drop next week is more than likely. But of course, higher time frame has higher hierarchy. Okay, Kiwi. Kiwi is actually also nice. Okay, I'm gonna hold that position too. Monthly time frame, same thing. In my opinion, this is a good one to head back all the way to 72. That being said, there's a potentiality to head around 260 at some pips. Okay, so correction, continuation, either a lower high, but this is also a correction of this impulse. Okay, so after 1, 2, 3, 4 months being bearish, This one got battered so much that been way oversold. You can see it on a bigger time frame. Okay, so they need to create some form of room for this to head to the upside. All right. Within the criteria, secondary downtrend, it's just holding that. In my opinion, it's just a consolidation before continuation. Beautiful force. Goal is still to go to 70.58 all the way to 71.22. So this is really good. 75 all the way about 130 upside in pips. And through there about 156. 4 hours was saying to go short. And so it comes back down here, but in the 4 hourly, nothing. I believe this is finished. 1 hour saying to go long, and also you have an M3, M2 to go long right there. Pretty nice. Okay, so that's it for the majors. I'll have a look at the euro against the yen too. Monthly time frame. Very bearish. There's some more room for the euro to drop against the yen around at 124. Preferably if you go through 130, 131, and we can go short. Okay, so for now, a lot of selling pressure from last month. Weekly time frame, stability, correction before a continuation. So longer term bearish, short term to medium term is bullish. Just to fill in the gap, right? But okay, not very nice. Look at the volume. There's no volume. Odds and probability that this is okay. Short term is bearish, medium term bullish. So they can come back around 126 or between even 125, and you see a higher low right there. That would be nice. They just fill in that gap. In actual fact, this is a good one for shorting. So I'm bearish with the euro against the Japanese yen. 4 hours, nothing from the correction. This is just a correction from this impulse. 1 hour, already saying to go short. So there's already an entry to go short actually with the euro. So euro yen, I'll give it a 3-star out of 3 for shorting. Pound yen. Monthly, same thing with this guy. Very bearish. Correction though. Stability from this. So if it goes around 148, then we'll be shorting it. So longer term is bearish. Medium term has a bullish. Preferably the price will come back down here though, but there's a potential M2 for this because this is also way battered on the weekly. Bam. So potential M2. But M2s sometimes are also correctional patterns. Daily time frame. Oh, it has some room, but preferably if you come back here to create a higher low, then great. So no go. Just being patient with this. Just be patient. And it's just filling the gap. And this is how actually people get caught. You don't want to get caught. Too expensive. Already expensive supply. Better reference leg 145. Yeah, it's about 80, 90 pips discount. 45 even better. But supply too high. On the demand. Okay, that would be a good one. 1 hour. Nothing. Okay, that's with the pound. Let's look at the, might as well go to the Aussie. Potential bullish with Australian against the yen. However, because of this long lower shadow, just be aware of that one. So, so just on a correction standpoint, a lot of force right there. So long term, I'm bearish with the Aussie against the Japanese yen. Weekly, potentially all the way to 84, but it's too expensive. Daily time frame, yeah, no go. Part of equilibrium, preferably will come back down here, way better. Yeah, makes sense. So this will come back around 81.30, great. So just be patient, 4 hours, nothing, exhaustion of price, too expensive. So a lot of them are pretty expensive. CAD Japanese yen, finally. So here's a trade that we were at for a longest time as well. But oops, go through this. Monthly time frame. Boom, boom. Correction. Long term, I'm bearish with the CAD against the Japanese yen. Weekly, already started. Preferably the price will come back 85. So medium term, I'm bullish. Longer term, I'm bearish. That means then that shorter term, also bullish. Would love for this to go to 85.50, 85.60. Or better yet, if it comes over here, 86.60. So I'm keeping an eye on this from a lower low. So we were actually too early at one point. We got it here at 84, average all the way there, sold some more on this side, kept going, sold some more over here. Then when it came back on this side, actually started at 84. Then Italy came in, bam, it tanked even further on to 83. So, but nevertheless, better, I mean, we made some profit because this one also took to the reversal. So right at this point in time, short-term bullish, medium, longer-term bearish. Okay, makes sense. So in actual fact, probably even bearish right at this point in time creates a higher low than bingo. So based on this one, short, based on 4 hours, long. Actually, it's a nice one. Cool. 1 hour correction. Nothing, just leave it alone. Last but not the least, the Kiwi. Monthly consolidation after since March, 1, 2, 3 months in a row. Also been battered for since 2017. In my opinion, there's going to be some form of a correction. Good opportunity. Longer term, bullish. Weekly time frame, already stated it. There is a good potential long right there. I think part of the rebound. Okay, better strategy. We'll come back down here, about 180 pips. Creates a proper high low. So there's a lot of setups actually with all the trades right here. So it's currently exciting. Correction a little bit and then buy back in. Daily time frame is saying to go long. It's just too expensive. You have a lower low, no go. Okay, so wait for it. In actual fact, this is just perhaps just feeling that too. Oh yeah. So nope. 4 hours. That's already exhausted right there. Supply level. Stay away from that. It's currently running out of steam too. Okay. So daily could potentially continue to go for further, but 4 hours is already way over bought and you have divergence. So odds and probability that this is going to drop is highly probable. So that being said, if there's any potential trades, a lot of potential trades, Euro, US dollar, like I said, against the yens, really good. Aussie against the US dollar is a hold. Another opportunity actually of buying, preferably though, if you want a better price, wait for it to come back down. That's a better deal. Kiwi, same thing. So they're all in correction mode, stability. A lot of force from here. If they come back around 69.60, better bet for you. But other than that, these are really good ones. Okay, so any questions? Bella, do you have any questions? Kenneth, do you have any questions? Hope you write something there down and check it out. Other than that, we'll look at it again on Monday for those opportunities.
So when you say, can you hear me?
Yep, I can hear you, Kenneth.
Yeah, okay. So when you say a better price, or cheapest price,
so
relative
I requested for eyes. Same way.
Go ahead, please, Kenneth.
Relative to the trend, right? So for instance, if you see a trend going up and you expect that trend to continue, you're looking for a pullback.
Correct.
Is that what you're saying when you say
Yes,
Yeah, it's too expensive.
exactly.
Okay.
Yeah, because when things are too expensive, it is way better. Because like right at this point in time, it's like properties, right? Like building or buying a property. Will you really buy the property at $70,000, or can you get? Will you place a bid at 69,550? Which is better for you?
Yeah, the latter. Mm-hmm.
Oh, absolutely. Because I mean, right there, you're like that's what we discussed yesterday in terms of risk. If you're buying here at this point in time and you're buying at supply at 69,881, what if it comes back down to 69,550? Then your risk basically has increased massively. You feel what I mean? Now, if you're buying, at least you get a better discount. And say if you want to, your stop loss is below this low right there at $68,800. If it goes below, you're just gonna sell and just take your money and basically you cut your loss and run, right? But if you're buying here at 69,880, and that's at least $1,000 difference. But if you're buying here at 69,550, so your risk between here and there is only $690 compared to there, there's $1,000. Does that make sense there, Kenneth?
I mean, I follow the overall principle, but when you go to the chart, I guess I got a little confused. So
Yeah.
yeah, okay. So if you look at this, this is the New Zealand US dollar. Right?
Yeah.
All right. So, and what time?
Is
I'm
a
on a
daily time
tablet,
frame.
so bear with me. This is the D1. Okay. The D1.
Yeah.
And so
Daily time frame.
yeah, so you're saying that well, first of all, where do you see the trend going on
So
this
long
current
term,
situation?
the price cannot just keep falling.
Mm-hmm.
They need to create demand in order to have supply, right? So when things is way overly sold
Mm-hmm.
and there are no more buyers, then how can they sell more when there's no supply? Then they need to create demand. So to create demand is they need to push the price back up, where here there's a lot of selling pressure on this area once again. So these are how oscillators work. Oscillators such as your momentum, your stochastics, RSIs, and so forth. In order for something to go, like say, if this is a daily time frame, go through a weekly time frame, let's see. So weekly, way oversold. Price is yes at demand. You can get it at the price right now, no problem. Can it go to here, about 145 in terms of distance? Absolutely, no doubt. The price will get there, probably in a couple weeks or so. If you're buying right now and you just forget it and you put your stop loss, say here, 137 pips in terms of stop, to gain all the way there, 164. That's just above 1-to-1.
Yep.
It's 137, 160. So, but price is falling. However, here is a nice one because you have a lower low, you have a higher low. What does this mean? It means then that when you're dealing here with pure price between buying and selling, no one was willing to go lower. Institutions are not willing to push the price all the way back down there. So in other words,
wait a minute, but how do you know that now at this point? How do you know that they're not willing?
make it this way. If you place a bid, now say for example, I'm the seller, you are the buyer. You're a big institution. You place a bid right here at 68,818. The last low was at 68,503. Now, if you're an institution and you're going to say, hey, I'm going to place a bid at 68,500. Bala, on the other hand, will say, I know something. I know that Kiwi is worth more than 68,500. Bala then will say to me and said, hey, I will offer you $68,818 and I will buy a big portion of what you're selling. So if you're going to place out a bid at 68,500, I'll tell you, sorry for my language, but I'll tell you to get stuffed. And I said, you want it? Well, then either you overbid Bala's bid at the 68,818 or you don't place a bid at all. Now you have to be fast, you have to be quick. So I know that I'm not going to be selling my product of the Kiwi at 68,800 or 68,500. No way. However, if no one's placing a bid and all of a sudden you have, remember, you don't have a competitor. You're saying to me and said, you know what? I'll buy everything from you at 68,040. Well, the last lower here was at 67,797. You're gonna tell me, well, either I'll buy everything from you from $68,000. That's if you don't have any competitor. If I'm that desperate, I will take you on, and this will keep dropping all the way down to 68,000 and below for sure. However, you now have a competitor. Bala came in and said, I'm going to offer you 68,818. I'm going to say, done. That's a done deal. Then all of a sudden, everybody followed Bala. Why? Because he knows something. He's a developer. He's a big developer, and he knows that maybe, perhaps, Kiwi's economical situation will get better, and there's going to be more stuff happening that can give him more money. Maybe the housing industry is in demand, right? So all this type of stuff, then all of a sudden they will follow Bala, and this is what happens in the trading floor. Boom, everything goes quick. Boom. If you miss the price, you're done. You got to wait again until the market maker creates more price. Then that now means that you got to wait probably the next day to get a better price point. So this is the price point here at the manufacturing price where Bala bought it at. 68,503. No, that's 68,818 here. That was the last low. And if you can see here and notice, no one was willing to go below this low. Why? The seller is rejecting all price points going below this low. This is how institutions leave clues, kind of, but this is what we're going to go through this with you. Now, Bala basically said, hey, you know what? I'm buying a lot from you, and all of a sudden everybody followed him. That's why there's a lot of force. There's a lot of buying right there.
Okay.
Now, the price got down to 70,000. No one's willing to go beyond this high, but no one's willing to go below certain lows right here either. So what does that mean? Because there's a lot of buying pressure over there. No one's willing to go over there unless some guy is going to say, you know what? There's a big news. New Zealand's economy is crap anyway. It was what we expected. We're going to sell everything. So whatever Bala bought here at 68,818, he will offload everything bit by bit. He made money, but because he knows all the news and resources ahead of time, he will sell everything and everything will follow suit and will create new lower low. Somewhere, sometime in the long term, guaranteed. This is how our price, because it's important to read price. You need to fully understand the mechanics of what's really happening behind the scenes. You see, this is a two-dimensional chart right there. But behind that is there's a buying, a buyer, a seller. And part of that price that's being dictated to go long and to go short is based on news, based on economical news.
Mm-hmm.
You hear me? So that's how we look at it. Now, if someone is willing to come back down even better here, but 69.60, boom, and this is where we're going to get the better deal, better price. So if there's a lot of support, that's hence support. If buyers are supporting really at this price, then great. Then if you can come back down here to get a better deal, awesome. However, if you're not willing to go and get a better deal, no problem. You can buy it right now at 68,870. If your forecast and you're still saying that there's more room to go to 72,000, then you still make money from here to 72,000. That's like a $2,000 profit, basically. right at this point in time, there's 207 pips. Okay, so I know I'm spinning your mind there at the moment. I can see there, Kenneth. But we're definitely going to go through it. This is the foundation. You need to know the basics. This is purely basic economics of buying and selling, right?
Okay.
All righty. I'm sorry.
Yeah, I think it's just a lot.
I'm sorry, Kenneth.
Yeah, no, I'm just saying. I think it's I'm missing a lot of background that you're using to do your analysis.
Absolutely, that's right. It's exciting. Bala, yes. Do you have any questions, Bala? You muted yourself, Bala. Nothing. Hello, Bala. You're muted. There you go.
Yeah, no questions today. Sorry.
No questions. Awesome.
Yep,
All right, guys, I got to make a move. I got to go to this parent-teacher meeting. I will see you guys later, and have a good weekend. I'll see you next week.
Okay, take care.
Thanks for coming. Bye.
Thank you, Ray. Thank you, Ray. Bye.